Hello, everyone. This is Adam Meister, the Bitcoin Meister, the Disrupt Meister. Welcome to This Week in Bitcoin. Today is the last day of January. Well, January 31st, 2020. Strong hand. Golden age of the 2020s. Welcome to it. Bitcoin is the next Bitcoin. One Bitcoin equals one Bitcoin. Value your wealth in Bitcoin. You know I'm offended by selling that Bitcoin. All right, dudes. Wow, this month has gone by real fast. I can't believe it's going to be February tomorrow. I guess there's a big football game this weekend. Some people are going to be watching or something. Dustin of Did You Know podcast is here. David Nage has returned from Arca. And we got Alex Edelman again he's been here a lot. From Lolli, he's here. He's offended by selling Bitcoin. He's trying to get you more Bitcoin. But all right, dudes, let's start off with the news of the week. We'll start with David. I was impressed by the tweet that is linked to below. And by the way, all these guys are linked to below. I got to say, hello, my elite friends out there. Check out all the links below. But a better metric than boring old market cap. And a lot of people are excited about the Bitcoin price, but I'm excited about the realized cap of Bitcoin, okay? It has reached an all-time high of over $103 billion. And the previous all-time high was back on November 18th of 2019. So what does this all mean, David, in your opinion?
So I think it's interesting. There's been some work by Glassnode that you're citing, and Rhythm Trader obviously put out that tweet also today too. And so from Rhythm Trader and from what I've been able to ascertain, market cap, or what we're calling realized cap, is calculated by taking the value of all coins at the price they last transacted on chain. And so it's an interesting thing that's happened within the Bitcoin community, within digital assets in grander scale, is that we're all trying to figure out how to actually analyze what's happening here. We're trying to come up with new world metrics to be able to tell people this is what's happening. This is how Bitcoin is growing. And so I think it's really interesting that Glassnode also talked about what they consider healthy Bitcoin growth. They compared the daily net growth of entities and the net growth of addresses. And they noticed that there's some really good, healthy, consistent adoption of Bitcoin over the last 10 years. And so we've been talking about this at Arca. We talk about this to other institutional investors. We talk to them about the overall growth of Bitcoin. And so we also look at the number of Bitcoin or cryptographically powered wallets. We've seen tremendous growth there. I believe we reached over 40 million at the first half of 2019, representing basically enormous growth from less than 8 million users in the second quarter of 2016. So all of the numbers that we're seeing indicate that further adoption of this is going up. And why do we think that's happening? We think that's happening for a few reasons. We think that Bitcoin is starting to resemble a global macro hedge. What does that mean? What we saw in the beginning of January of 2020 is that we had the U.S.-Iranian conflict. We saw that the initial first days of that, Bitcoin did not necessarily move as quickly. It took a few hours after the first parts of the conflict occurred. But then what we started seeing when the missiles were sent over from Iran to the bases where the U.S. were, that Bitcoin really moved very quickly within minutes. And then what we really found quite interesting is that when Trump de-escalated, it moved down within seconds to minutes very quickly. And we started to see that, perhaps the market itself is starting to acknowledge that Bitcoin is a risk-off, risk-on trade, and that for many institutional investors, this is something that they could start taking a look at and putting into their tool set effectively. For many institutional investors, so people can understand, is that they try to manage risk using the tools that they've had at their disposal for a number of years. And one of the primary ones for many years has been gold. Gold is basically what I consider a butter knife that has a set time that you can use it. You can use it from 9 to 4, 9 to 4:30, whatever it may be. Whereas Bitcoin is basically a samurai sword that is cryptographically powered that you can use 24/7, 365, and it helps you cut and it provides you the ability to really cut through a lot of the volatility and the global chaos that we are starting to see. And I say chaos in a manner not to frighten people, but we are starting to see some things that are happening here that are frightening people and are frightening investors. Iran and the U.S. conflict was one of them, but now we're starting to see the coronavirus take effect. We're starting to see things happening where Delta and the American Airlines are ceasing flights to China. We're starting to see a lot of concerns that China's GDP is going to be negatively affected for the first quarter, at least maybe to the second quarter. And they are a major component of global macro economic behavior. And so we are starting to see that potentially this adoption and this furthering curve up that we're starting to see, that we started with Glassnode and with some of the things we're talking about in terms of realized cap, that investors out there are starting to acknowledge that Bitcoin does present properties that allow them to really manage risk in a new way that they didn't have before.
Whoa, you just laid it all out there. Pound that like button, everyone. All right, Derek, he just put a lot out there. You probably have some comments there. He mentioned, well, one thing that I like to say, that gold is old there, that this is what people are getting into instead of gold. And also you mentioned the term entities, and the Glass guys said there are 23.1 million entities holding Bitcoin right now. That was something I wanted to bring up, and you touched on it. So, Derek, do you have anything any comments on what was just said, or about realized cap or the entities owning Bitcoin? Derek.
Dustin.
Dustin. I'm calling you Derek, man.
Yeah,
no, Derek and the Dominoes, man. No, it's Dustin, guys.
Yeah, sorry.
I don't even know what I'm saying here. Sorry, Dustin. Sorry. I'm calling you
no. So I mean, looking at that, and I had only briefly looked over that Medium article, but I mean, this has been brought up in separate stories as well. One of the the concerns that is being brought up with this is the amount of money, or I should say, the amount of Bitcoin being held on exchanges, especially with Coinbase, approaching 1 million Bitcoin. And I think in the article, I don't want to keep on scrolling and make you guys wait, but it was like a little bit over like 2-point-something million Bitcoin was being held by multiple exchanges, which, if you consider the amount that's probably been lost over the years, Satoshi's coins that have never moved and likely never will, all this stuff, I mean, we're far below the 18 that's in current circulation. And this does concern me a bit, where that much money is held up in custodial wallets, where it's not being accessible by, or not being held by private keys of the actual users. And I think that this is a step, custodial and all that. This is, a lot of people are just not used to the way all this works. This is very, very new, this idea of like holding your keys, and if I lose it, I'm done for, right? It's a kind of a jump in the mental processes that people need to kind of go through to understand how wealth is going to be held in the future versus being used to Visa reversing your transaction if somebody stole your credit card number. But I think that is something that is a matter of education by individuals like everybody here, of trying to get people to be able to, a larger number. There's always going to be a certain amount that hold their Bitcoin in custodial solutions because they're more comfortable with that, and that's fine. I'd rather them do that than holding their US dollars or Russian rubles in custodial banks. But I think that we still have a long way to go for this, and the more money or the more Bitcoin that is held by private keys of users versus in custodial wallets, I think that's another good metric that we should be looking at as well.
You really brought up a good point that I forgot about from the Glassnode article, that, okay, there are 23.1 million entities out there that own Bitcoin, okay? But like the top 7 or 8, I forgot what it was, are exchanges, are custodial, and they own like 2 million Bitcoin. I mean, it's unbelievable. The amount of people who think they own their Bitcoin, but let these exchanges hold their Bitcoin. That was shocking for some, and just a reminder of what you're saying. We got to learn to control your own private key. Everyone's got to get on that bandwagon. Alex, what's your take?
Yeah, so we deal with somebody at the beginning of the funnel, someone who's just getting into Bitcoin, and zooming in a little bit on like more of the micro trends. We function very similarly to to exchange. We have custodial wallets, but we also see that what percentage of our users are moving off to their own addresses, and so when that hits. The more that hits, the more that the exchanges, move their money to the wallets, assuming it's not, being manipulated, which is probably a false assumption. I think that's like we see that over 99% of our users do not move their money out of our wallet, and so if that's anywhere close to the number that of Coinbase or anything, I think that this number is actually very small of the people who believe that they're in Bitcoin or have Bitcoin, which I think is a real Bitcoin user, because that's somebody who will get smart. They will start to, realize in the future, they will understand private keys in the future. And it's just a matter of time about teaching them about self-sovereign banking, identity, and the self-sovereign individual. So I think I kind of think that it's such a small number, but it is a good number to as an indicator of like retail adoption. But also, like if we go back to manipulation, who's to say that an exchange can't just spin up a bunch of addresses because they change something in their business operations? Coinbase has probably multi-million addresses that they've spun up over the years. If they change one thing in their business ops, as we could as well. Like I could see somebody manipulating the market dramatically with that number. So I remain skeptical of if that number is actually that real.
Okay. It's good. It's good to be skeptical. These guys, we're trusting that these guys' methodology is really measuring everything accurately. So I thought it's an interesting new way. I like to hear about new methodologies of looking at things, and because people always ask how many people really own Bitcoin out there, how many entities own Bitcoin. All right, let's talk about smaller transactions here. That you know about small amounts of Bitcoin going back and forth. When people use Lolli, they get Bitcoin back on purchases. Let's talk about, though, the Lightning Network and what everybody was talking about yesterday, Jack Mallers and his strike that allows people to directly pay their Lightning bills from their bank account. What was your take on this, Alex? We were talking a little bit about this before the show.
It's awesome. It's one of the. It's extremely bold. I think he's one of the best builders in the space. I think he thinks about. He's pushing the boundaries on UI, UX design. He makes things. Jack makes things incredibly easy. I've been impressed with Olympus. I've been impressed with everything that he's built. My worry is that just reading, the literature that's out there that he's published, I personally worry that he's not, crossing the T's and dotting the I's. And I want, I'm all for everybody pushing the boundaries, making things that are cool and bold. But I worry about people protecting themselves, because you can't keep building if you are in jail. What the current process looks like is it looks directly illegal. Now that everybody plays in different boundaries, and I'm all for people again pushing adoption through all means. But I do worry it doesn't look legal to me at first glance. And we deal with a lot of legality with our business of how we're transferring and making sure that it is legal at all points for not just us but for the consumer as well. And so that's the next piece that I would like to see answered is what lawyer has cleared this for these users, because I think something as a builder, it's not just about me. I could be looking out for myself. I could be doing all the things right for me. But if I'm building something that's putting my users at risk, then I just need to be very clear at what that risk is. And I didn't see any piece of that in the Medium post. So I don't want to call him out. I just think it's that should be the next piece to address. Because essentially what he's doing is he's creating a money transmitter, but without the legality. So I don't want him getting in trouble. I don't want the user getting in trouble. And before they launch, I think that'd be something very important to cover. Or open source it and, just like don't launch it yourself. Like, I don't want him getting in trouble. He's one of the best builders in the space. I very much respect everything he's doing. But it's dangerous territory.
Before we go on I want to hear Dustin's take on this, but with your with Lolli, is it a pain in the butt with all these small little transactions? Is it a pain to report all this to the IRS and everything? Right now, like every little transaction that you do, you have to report to the IRS, right?
So we actually operate in a very interesting category because rebates are not taxable income. So that's I'm not an accountant, but that's one of the interesting pieces of our business that a lot of people don't realize. That's the stance that Ebates takes. That's the stance that all these rewards companies take, and that Ebates bought my last company, and that was one of the insights that I brought to the Bitcoin space. So it's really like people are welcome to report their earnings. Some accountants I'm sure would encourage people to. Technically, it's like our stance is if Ebates isn't reporting their rebates as income, then do you really have to report your Bitcoin as income? Now, when you transfer it or when you actually exchange it back to the US dollar, that's a little bit different. It's really you are making a transaction. You're essentially selling it, but all the Bitcoin that you've earned is a rebate in our flow of funds.
Okay, excellent. This is a good insight. I'm learning new stuff here. Everybody check out Lolli. All right, Dustin, your take on this Lightning Network development by Jack Mallers, Strike.
Yeah,
Ooh. Did you go? Oh, wait. Dustin, you there? Oh, your connection went a little whack on us.
I'll hop in with another piece if he's not.
I'm happy to talk about this.
Oh,
too.
go for it.
Go for it. Yeah, David.
So I agree with Alex. And as it relates to the first kind of thread that we were talking about, as it relates to kind of bridging this gap between the legacy to the new, Alex is right when you're talking about transmission of funds, transmission of assets. You have to ensure, especially in this day and age, that you do get those proper money transmitter licenses. And as anyone out there probably knows, you can do that here in the United States, state by state, and then you can also go that and do that federally. Both of those are time consumptive. They are economically consumptive. Sometimes there are certain states that can take a few months. There are certain states that can take a year and a half. I think California is a fairly arduous one to get through in terms of money transmission. And so that is really important. But I want to emphasize the fact that from a first glance, what Strike is trying to do is interesting because at the end of the day, especially as it relates to retailers, there are issues. Retailers, the adage was that a retailer would not necessarily want to be paid in a Bitcoin because of the volatility and because they don't know if they want to hold it for accretion value or if they need to just get rid of it and sell it off. And so then there's also the issue in regards to volatility. But then as it relates to the actual Bitcoin holder using Bitcoin for the tax purposes, that is something that is quite cumbersome. Every time that a person uses Bitcoin to potentially purchase something, that is a taxable event here in the United States. And so trying to deal with those issues, I applaud. But at the same time, I agree with Alex. You have to ensure that you are working with the proper resources to ensure that it is something that is regulated and something that is properly set up so your users are not obviously at the end of the knife. But again, as it relates to this bridging of the legacy to the new, as it relates also to exchanges, I saw that I heard that you guys were talking about kind of centralized exchanges as it relates to the first thread, as I mentioned. It is worth noting that for the purposes of trying to bring outside people into the Bitcoin sandbox, we need to be cognizant. Again, I've said this before on the show, that if you're talking to institutional investors and you're talking to family offices and others that we all have said that we want in this space, they need certain things. They need to have custody. They need to have protections. They need to have a lot of the fiduciary responsibilities that many retail investors don't necessarily think about. So yes, do I believe in not your keys, not your Bitcoin? In theory, yes, and I am a proponent of that. But I am also understanding that to bridge this gap, to bring people outside of digital assets and Bitcoin, to bring them from the outside in, we need to have these bridges there first. And that's why I'm really a proponent of what Alex is doing at Lolli too, having the ability to do what you normally do on a daily basis and consuming and buying things online and being able to earn Bitcoin in that fashion is something that I think is potentially massively important to furthering adoption outside the box. Again, I think a lot of us in the space in the ecosystem for the last 2 years have been focused about building things for inside the box. And we need to continue to think about outside the box and how we can get people, the billions of people that are not currently in Bitcoin, in.
Wow, very, very good point there. Bringing the newbies. Yeah, it can't be too technologically sophisticated. There's got to be easy on-ramps for them, definitely. Dustin, your connection is back now. Thank God. What do you got to say? No, now it went off, of course.
One more.
Yeah. Yes, Alex. Now Alex's connection went a little whack there. That's very interesting. Hang on. Alex is having connectivity issues here. It says, and so is Dustin. Oh my God, what is going on? We got the two of us. Hang on a second. There's Alex. There you go. Yeah, you're back.
Cool. Yeah. So one more piece about the strike stuff. I think David, thank you for the kind words, and then also I think we're on the same page about a lot of things. And I think that there's if we were to let's just take this assumption that just for the sake of moving the conversation forward, and I don't want to be a stickler for the rules. I want people to push innovation forward. And so let's just talk about. Am I back on? Okay.
Yeah.
Let's just talk strike, assuming it's legal, and assuming let's just say an exchange were to be using this technology in open source capacity and had a money transmitter license. The user experience of this is very interesting. It's who would benefit from this flow of funds that is a novel flow of funds is essentially what Jack has created. So what's I think most interesting is who benefits from this. The nice part is that a consumer could hypothetically easily put in their debit card. They send funds to somebody who wants to receive their funds in Bitcoin, and the advantages of that is that the fund is immutable. And so where the incentives that would be in place if someone were to give somebody a discount because they paid in Bitcoin would be very interesting, because they know that there wouldn't be chargebacks. So if I were him, I think that there could be ways in which I would message it better and differently, I think, about the strategy to go to merchants and to convince them, hey, this could be a way for you to accept Bitcoin, and it would be immutable. Work around the debit card companies, work around the credit card companies, the banks. That would be a strategy I would deploy. I think that there's still very few merchants that actually want to accept Bitcoin. I know personally, just talking to our 1,000 merchants, I think it's very difficult for them to understand or think about changing their balance sheet, changing their tax, their accounting practices to accept Bitcoin. Even if they were to use something like this, I think it would be very difficult. So you'd have to change the flow of funds for someone to actually pay with debit card. Maybe if they want for privacy and do something of through Bitcoin, through an address that's spun up and then back to cash. But at that point, is it cheaper to transact than the alternative, and what are the actual benefits to the user? Maybe the fact that you can't, maybe the fact that it's immutable is enough, but and you can reduce chargebacks. But at the same time, that's there's a lot going on there, and I think it's not quite there yet. That's going to bring the masses into it, or make it more approachable for even the current users to use Bitcoin or want to use Bitcoin.
All right, Dustin. Now I'm sure his connection is great. Take it away.
Yeah, no, I hope.
it's very strange. The minute you say something, it goes away. It's you might want to get rid of your picture. There's a way to like eliminate video, like no video. That might do it. Just so your audio. I think that might solve the problem. All right, go. All right, yeah, Dustin, can you hear me now? He's there. Dustin, speak, please. You're the new person on the panel. Everybody wants to hear what the new guy has to say. Oh man. All right. Okay. Dustin, you hear us? Okay, you're unmuted now, so speak. It's not working.
Can you hear me now?
Yeah, that's good. That's good.
Oh, okay. In regards to what David was speaking on as far as for institutional investors, I completely agree as well. That's going to be a huge part of Bitcoin, and not to act as though we're going to have family offices and institutions, as he said, they're not going to be saying they're holding their own private keys. I'm just more concerned with the central points of failure for individual users in exchanges. As far as for with Jack, and it was a great point that Alex brought up about issues with legality. I remember I had to do a thing with FinCEN back in like 2013 when I was trying to rent out. I was worried about being a money transmitter. I was renting out my GPUs for mining on like little short-term contracts on eBay, and that is something that can really get you in a really bad pickle if you're not very careful with it. But I think things like this are very interesting. It's great that you can do that, but you always want to be very careful in terms of not getting the department and making you sad on the bad side of you.
Yeah, definitely. And I'm sorry you had to have experience dealing with these bureaucracies and whatnot. And before we move on to some bureaucratic type of topics, David, did you have anything else to add because I thought you were going to say something else?
No, I think I agree with Alex. We all are trying to walk this plank of trying to ensure that we do not stymie innovation, yet ensure that we are doing things that do not put us all in jail. I know that sounds kind of funny, but I think we need to, there is this balance. And I think we here in the United States, we've had the benefit of working with regulators that have been very open to this and have worked with companies to learn how, Bitcoin and the underpinnings of that are operating. And so I think at the same time, I agree with Alex. We don't want to stymie innovation. We want to continue to have founders that are going to break those boundaries. For instance, Uber, they had a kind of a mantra of breaking things and going fast, and that came to kind of bite them in the behind a little bit. They went public and they've generated billions of dollars in the meantime. But I think for us, to have sustainable growth and ensuring that our founders are doing things in the correct fashion really helps for overall kind of optics with other people. We want to make sure that we don't have founders like Quadriga and anything like that hitting the news waves, because every time that happens, it's a further kind of black eye, and it kind of further slows down adoption of the overall asset and of Bitcoin.
All right. Now, speaking about clarification so we all don't end up in jail, all these and I love the innovation. I wish there weren't all these rules out here and people didn't have to worry about getting thrown in prison and everything. I think it's ridiculous how strict the government can be. But if you are a creator, if you're starting a company in this space, you got to deal with them. And so we've got a guy running for president. There's a presidential election coming up in America. Maybe some people have heard about it. And there's some Iowa caucus coming up. I guess it's next Thursday. I don't know when it is. It's very soon. And so there was an article. There are a lot of crypto people that like Andrew Yang. Let's start out with that, okay? And he's said for a while he wants to clarify everything. And we all want clarification. We all definitely want clarification. And everything is also relative. In politics, How many of the people running for president actually can use a computer even? That's a great question. So when you hear Andrew Yang talking about cryptocurrency, talking about Bitcoin, people have gotten excited. So let's start with Dustin. What's your take on Andrew Yang?
Well, I've been pretty critical of him for a long time, mostly just because I think that his policies are quite a bit ridiculous. And I thought it was quite smart for him to use the math pin as kind of the meme that he's surrounded himself with, because it kind of insulates people from actually looking too much at the actual math of what he's proposing. But in terms of crypto, he is constantly coming. He doesn't hold the Bitcoin ethos. He doesn't believe in the principles that underpin what Bitcoin is, or at least what I believe the principles of Bitcoin is. And he doesn't really ever mention it too much. He just uses kind of that ethereal crypto term or blockchain. And the way that he's talked, it seems to me more that he either understands it and actually really understands, Bitcoin and everything, or he doesn't really understand it at all. But if he does, he's being purposely really, opaque about this, and just uses this very nebulous term of blockchain. He talks about like blockchain voting, which doesn't make any sense, because you're going to have like one centralized blockchain is supposed to be more secure than 5 or 6 centralized voting electronic voting machine companies. And I do like the one aspect is his idea of, as he said, clarification. There are a lot of things. There's a bill right now for making small Bitcoin transactions or just any crypto tax exempt, which I think is very useful. It's very difficult to account for on your taxes, having to go through every single little transaction that you've done on some software wallet or with your own node or whatever that you're using. To actually do that, because everything is a taxable event. Anytime that moves from your wallet to somebody else's wallet or on an exchange to your wallet, everything is a taxable event, and it's a nightmare that I've been going through. I was one of those. If you remember last year, they had the letters getting sent out. One was, the first order was, hey, we think you might have done something with Bitcoin. Check and make sure that you are in violation. The second was, we're pretty sure you did. And the third was, we're really sure you should refile as soon as possible. Mine went straight at the CP 2200, which is basically an audit. And I've been dealing with them since June or July. And it stems from, I made the mistake. It was my fault, but I just used regular tax software because I don't have prior to this, complex taxable income. So I just filed it under capital gains, and I did not file the form 8949, which establishes a cost basis, basically what you bought and sold it for. So they took the total volume as my income, which would make it a very substantial unreported income. And I've been going back and forth with them. It's very difficult, but any clarification, because SEC, CFTC are all clamoring over who is actually going to have kind of the oversight over all of this space. So federal clarification is great, but I do like state by state differences, because I think small states that are more forward thinking should be rewarded.
Wait, I gotta ask you a question here. So you got a bad letter. You got a bad letter, and I'm glad you're sharing this story, because I guy with a bad letter on yet, or anyone that said they got a bad letter. So basically, you all it was selling your Bitcoin, right, for fiat, and you didn't report it correctly. That's the bottom line.
Because the way, and I don't blame, because the way that it looks at the IRS, let's just say I bought one Bitcoin at 10,000, I sold it at 10,000, I bought it again at 10,000, and then sent it to my wallet at home, or to the wallet that I control with my node. To the IRS, it looks like $30,000 in unreported income, because they're just counting the entire volume, because they don't have a cost basis for it. And so everything that I basically did, because the 1099K basically counts anything that I sent in and out as merchant income in the way that they kind of like it would be if you had a Stripe. And I don't blame them for it. I was the one who screwed up, but now it's a real nightmare. So if anybody's listening that isn't sure about how all that worked, you really need to go back. I would recommend it, because you don't have the the big hand of penalties in it, because the interest is like it's staggered, but it's 5 to 6%. So if you have from 2013 something that you didn't report correctly and they come back, I mean, you could be looking at the compounded interest of 6%, 5-6% a year or whatever it is, for 7 years, and that's not going to be fun. Whereas if you go and fix it yourself, they're a lot more forgiving in that aspect. So it was my fault. I didn't understand it well enough, and I am learning very, very quickly how to actually do this correctly, and doing it correctly with an actual CPA and tax attorney that knows what they're doing.
I really thank you for sharing this real life story, because you sold you had to sell some Bitcoin, whether that's whatever you had to do. I tell people, to avoid all that, just don't sell your Bitcoin. Just don't. But again, you had to, whatever your personal business was.
Well, I fancied myself a trader in 2017, which I quickly figured out that, like many people did, I was more just riding a wave than actually having any real insight.
I'm glad you can admit that there, because so many of my shows, I say, don't be a trader, people. And people, why? Well, listen to what that dude just said, everybody, okay? Listen to what Dustin just said if you think you're a real trader. All right, so let's go to Alex here. We covered a lot there. It started with Andrew Yang. We also talked about he wants clarification. One of the things that I think everybody wants clarification is the government going to allow people just to have small transactions and not worry about all this tax reporting? What's your take on everything that was just said there, Alex? A lot was just said.
I mean, I think, hopefully that they come around and they realize that that this is good. We're being taxed on every single transaction because we have all these unnecessary intermediaries, and that's globally. Like there's, we cannot move money freely, and it's money, should move as quickly and freely as information. And there's, if you look at, I come from the payments world, and if you look at like a flow of funds for any sort of transaction, it is insane how many unnecessary parties touch it. And it's because we're based on the rails that we had 30, 40 years ago. And so like part of what I love about Bitcoin is that it removes all of those people, and it just lets you truly do P2P or, P to a person to a business, anywhere in the world, and that's part of the beauty of it. At some point, whether it's through a regulated stable coin or whether it's through another cryptocurrency that is federally mandated, hopefully they will see that. I think that it's going to be a difficult thing to get through. We have so many bank lobbyists, we have so many politicians that are being bought by the banks, by the credit card companies, by these like highly centralized institutions, that I think it's going to take a long time to remove that. I personally, I've talked a lot about this over the last year, and I think we're starting to see hints of it. I'm super long stablecoins. I haven't seen one that is going to be pervasive, but Bitcoin is the end game and is what we all strive to, and I think all roads lead to Bitcoin in the long term. But in order to get there, I think you need a stablecoin that is somewhat regulated, that we can use to transact freely, to reduce the fees, to remove the institutions, and I think that's going to be net good, and it's going to lead us into this Bitcoin future.
Oh wow, I didn't see stable coins getting brought up today. David, he just brought up stable coins. We're talking taxes. We're talking Andrew Yang. What's your say on this?
So it's interesting that you guys bring that up. I'm going to be releasing a podcast on my show, Base Layer, next week with Jeremy Allaire from Circle. We were talking about stablecoins a lot, but more importantly, as it relates to the politics here in the United States, as it relates to Yang's comments about digital assets. I think it's encouraging. While I get out of the political realm because I find that our two-party system is toxic. I do feel that, someone who at least acknowledges that there is a future here versus the current administration, which have tweeted out that Bitcoin is associated with terrorism and all sorts of nefarious affairs. And we have other people within the administration that have been fairly negative on it. I think it's positive that we actually have someone who is running that is talking, in the positive note of Bitcoin and digital assets. And so I think what's also interesting from my conversation with Jeremy, which was alluded to, is that while the policymakers, the congressmen and women of the United States are learning about this, it was an observation from Jeremy that in conversations with staffers, the staffers are becoming incredibly up to speed on this very fast. And I think that's encouraging because that helps dictate better policy going forward. So while the debate is up in the air and we're going to have a very interesting next few months here in the United States as it relates to the election, I think it's encouraging, for any of the people that are running for office right now, that if they are obviously spending time learning about it and are, pro math, for instance, or acknowledging that math and science matter versus some of the current, tides that we've had to deal with, I think that is a positive going forward.
All right. Yeah, I would say we try to stay off politics here too. It is incredibly toxic in the U.S., but a positive here is that at least Andrew Yang is bringing it up. He's bringing up crypto and Bitcoin. Who knows how much he really understands it, but it's better than a lot of it's better than I can envision so many of the candidates just going the terrorist route with it and just associate. I mean, you see in the Senate right now that guy from California, I forgot what he associates it with the worst of the worst. Okay, enough politics. I do want to ask Dustin something that was brought up real quick. We talked stable coins there. Do you have anything to say about stable coins or anything?
Well,
oh, God. And it cut you out there. Oh, my Lord. Someone doesn't want Dustin to speak. All right, well, let's move to a question that actually, first of all, in the chat, everybody's linked to below. Everybody check out everybody's Twitter. You can check out David's podcast there. You can check out everybody's company that they're talking about. If you just go to their Twitter accounts, they all link to everything that they talk about. All right, Dustin, you're back, baby.
Yeah, apologies to everybody for I don't know what's going on with my connection. But anyways, as far as for stable coins, I think I agree with Alex in that I haven't really seen anything yet that I have a lot of confidence in. As far as for staying power, but I do think that they are an interesting. They kind of use Gary Johnson, to not go politics again, but Gary Johnson's baby steps take on something like that is that people have a really hard way. This money itself as an abstraction is very difficult for people, or was difficult for humanity to understand. I mean, it took a very long time to move from straight hunter-gatherer to barter to this abstraction of money. And I think stable coins are an interesting way as a possible baby step to Bitcoin, in a way for people to get used to this concept of digital assets and digital money. Whereas, and it could be that a stable coin built on Bitcoin could be the killer app going for the first generation of Bitcoin, as it is going to be a multi-generational project for in perpetuity as long as Bitcoin exists. And it could be that thing that helps people to kind of ease into that bathtub and get used to the temperature of the water as we move forward, versus the kind of the more in your face of private, hold your own keys, run your own node, all that kind of stuff is a much more kind of smack in the face versus something like a stable coin that would be built on top of Bitcoin.
Ease into the bathtub with stable coins. That could be a slogan. Pound that like button. That's my slogan. Now we're going to go to this show is live, by the way. So we got questions from the audience here real quick and statements. First of all, Tony Travers sent $20. He said, strong hand. Thank you, man. Thanks a lot. I think it was Michael said he'd see me at the Unconfiscatable in Las Vegas on the 22nd of February. Wow, that's coming back up soon. In 3 weeks, I'll be in Las Vegas. There'll be a lot of Bitcoin people there. Check that out. And we got a question for Alex here. When will Lolli be in Canada? Alex, you get and now Alex's connection. Oh my God, that connection, that shocked. Okay, Alex, there you go. All right.
I promise I didn't dip out on purpose on that.
Okay.
Been getting Win Canada.
Yeah, Win Canada
on Twitter. So yeah, I mean we're working on it. We have I would say we have a lot of progress on the merchant partnership side, and right now we're looking at localizing and globalizing the site. So right now, we built for the U.S. To prove out the market. I think very few companies go international day one, and so it's very difficult to scale internationally because while we are working on top of Bitcoin, we do also have to deal with fiat rails in some cases and also regulations. And as we brought up earlier with Strike, we are thinking a lot about our users and making sure that we are giving them the best way to earn legally. And so I think that is a very important piece for us. So we're bringing a lot of partners to Canada. We've proven it out in the US. We're definitely coming there this year. And I would say probably best guess is 2 to 3 months, maybe 4 to 5, because we really want to do it right.
All right. There you go, Canadians. There are a lot of Canadians that watch this show, so you've given them hope. That's good. Before we go, I want to talk about family offices and Arca and David to give us an update on what's going on over there. But before that, in the description, I did say we would bring up the BCash drama that has been going on. I don't know if anyone wants to specifically say about they proposed a 12.5% tax, and then this week the guy behind the Bitcoin.com pool, whatever that pool is that who controls, says they weren't down with that. Real quick, Dustin, are you following this story at all? BCash, do you care?
Yeah, I mean, just kind of tangentially a little bit. I've been watching a little bit about there, and it looks like, I mean, that the minor tax whole thing, it seems to be completely off the rails. I believe it looks like, because I believe Bitcoin.com has pulled their support for it, and without that, I don't really see it going forward. I mean, outside of Bitcoin, I would say it's an interesting idea about some sort of. I always kind of thought that the way the Dash Fund worked was kind of interesting, as far as for promoting marketing, and that's one thing. Back to David's point about institutional investors, and I think that is, if you kind of look in a historical context, one of the ways that the U.S. was able to really kind of gain a lot of their powers. If you look back at the Whig Party, they did basically government contracts with the very wealthy people by building canals and roads. And the specific aim of that by the people in the Whig Party, Abraham Lincoln was one of them as well before it dissolved, was to bind the rich to the basically to the state, and they would be reliant either in large part or in some part of their wealth and power and influence to be able to have to have the government providing them with the money to be able to build these things. Plus, they would have the obvious issues of corruption to hold over their heads. So I think that if Bitcoin is able to bind both stratas of extreme stratas of society, both rich and poor, to them by offering them a really lucrative incentive to do so, is a really good way forward of not being as vulnerable to regulations, even things such as being made illegal, which I don't really think is ever going to happen now. They had a chance, but I think that day is gone. But it doesn't mean it couldn't still happen. But if you bind aspects of society that have either political or just have political and money influence, you're able to do that. So in that way, you also have to be able to sell your message real well. So the idea of having some sort of fund to pay for those sorts of things that Dash did, although it doesn't seem to be working, so I could very well be wrong in that aspect.
Yeah. So David, how do these crypto assets in the future go about funding their development? Your company does deal with other way beyond Bitcoin type of stuff, so I'm sure you thought about this. You've seen different funding mechanisms for these crypto assets, as it were.
I mean, at the end of the day, we see a taxonomy breaking out within digital assets. There's Bitcoin, which is the store of value, the programmable money out there, which we obviously, think is incredibly important within building a portfolio for institutional investors. Aside from that, then when you break apart to proof of stake and then staking models and how that all works out, we are definitely seeing, all of the traction that's happening there, or lack of traction as well too. It's not just, positive, it's also negative, and we're starting to see projects, go to the wayside. But I think in terms of the overall momentum in regards to institutional investors and family offices, what we find quite interesting, State Street, which is a big custodial here in the United States, did a survey towards the end of last year where they showed that 94% of 101 institutional investors have some sort of proclivity, some sort of interest, or want to get involved with Bitcoin and other digital assets in 2020. And I think that's a really good kind of marker for potential growth going forward. Fidelity did a survey last year with 401, which we talked about last time we were on. And so we are seeing a momentum shift. There was a bit of a lull in Q4 in regards to kind of the overall sentiment from institutional investors regarding Bitcoin and some of the other digital assets. But that has changed over the course of the last 4 to 5 weeks, I'd say, dramatically. And again, I think it is this kind of concept and this idea that Bitcoin can be a hedge against global macro calamity. And we are starting to see evidence to prove that and show people that it actually is working in that favor. And so the more data that we're able to collect, the more analysis that we're able to do, provides investors of that type of ilk a little bit more confidence coming into the asset class itself. And I also, whenever I talk to a family office and an institutional investor, the fact that Bitcoin has been around for 10 years has not died, even though people have said that it's going to be dying 300 plus times. It has not died, and it has not gone anywhere. And in fact, as we talked about at the beginning of the show, we're actually seeing, upward sloping adoption rates. And so I think all of that factors into some positive momentum going to 2020. And, as we have more black swan events like we're dealing with right now with the coronavirus, I think more investors are starting to realize that they need something that is 24/7, 365 that allows them to mitigate those risks.
So your take is very interesting. Positive sentiment toward Bitcoin the last few weeks because of the negative things going on in the world. I try not to. People are going to see Bitcoin the way they're going to see it, as a way to protect against these negative things. I try not to look at the negatives, but hey, you're telling us how the people with the money are thinking. So this is very interesting. I want those family offices to pile into that Bitcoin, baby, for whatever reason they may want to do it. Go ahead, make my day. All right. So Alex, I don't know if you have anything to say about the BCash thing we were talking about before, but give us, if you do, say it. But tell us what's going on at Lolli also. Any developments?
Yeah, we're working on the mobile app. That's our big focus right now. So the mobile app's going to let people earn on more things, on more daily purchases. So we've been working really hard on that. International has been a big piece of 2020. So giving Bitcoin to more people in more places, expanding to Canada, and creating really like a template for expanding to new countries. So I think that we've proven out the model in the U.S. We now want to take this model to different places, and Bitcoin is inherently global. So we want to be global. So building out the mobile strategy and then expanding out to Canada is a big piece. We have some really big partnerships that we landed. I think as far as like merchants go, a lot of merchants sort of like close off all meetings and partnerships during the holidays. So now we're like ramping up the business development side again. And we have some really big partnerships that we're going to announce over the next few weeks and months. But yeah, things are moving forward. We're feeling really good about Bitcoin. Keeping that the strong hands and keep moving forward.
All right, pound that like button with the strong hand, people. All right, so Dustin, you got the Did You Know podcast, and I explored your archives. I saw that interview you did with Ben Hunt, which was very good. He wants to like Bitcoin, but he doesn't exactly like Bitcoin, and he's worried about Libra. It was a great interview. You check out Dustin's Did You Know podcast. But tell us about your podcast and anything. What's going on with you?
Yeah, thanks. So that was an interesting interview. I think Ben is very he's really sympathetic to it, but his take was that we're just trying to play in the same sandbox as central banks, and that's where he thinks that we are failing. I didn't agree, but he's more than free to do that. And I had a lot of interesting interviews. People like Caitlin Long and Phil Zimmerman was also, even though he's also very critical of Bitcoin, but the creator of PGP. And we talked about Hal Finney for quite a bit, so that was a really fun interview. Mainly. It's didyouknowcrypto.com, but I created that back like in the days when I was a little much less Bitcoin centric, but I just didn't change the address yet. So the podcast really focuses on, as of late, any kind of things that have to do with Bitcoin, especially kind of the more esoteric fringe concepts and philosophy behind it, and kind of this emerging concepts of the I guess you want to call it the Bitcoin cult. And these very kind of religious ideas that have been forming up around it. And we talk a lot about that with the various guests. I just had Friar Haas on not too long ago. I had Gigi, Max Hillebrand, and we talked a lot about, I just kind of enjoy these fringe concepts within Bitcoin, and everybody's welcome to go. It's on every single major podcast platform at didyouknowcrypto.com. You can find all of those, or just look up Did You Know Podcast there.
Dude, you were just dropping some names. Gigi was on this show last week, and the week before we had Haas on. All good, dude. And Max has got to return to the show one of these days. But yeah, you've got a good thing going on there. I like that you let people from outside the space on that have, like Ben Hunt. I think that was a very interesting one. I know I'm going back to that one again, and I talked about it on another video actually. So people check that out. Check him out. We'll let David Nage have the final word here. Anything you want to say about Arca? Just conclusionary thoughts? Anything? Current events?
Yeah, I think we are moving into really interesting times right now, especially here in the United States, as we alluded to. There are those that, over the course of the last few weeks, not as it relates to Bitcoin and digital assets, but there seems to be a movement now towards investors that are looking at climate, for instance. And as someone who is used to look at that, over the last 10 years, it was banging my head against the wall trying to get people to take a look at the tech that was being developed. And now all of a sudden, it seems that, big investors like USV and Sequoia and other venture capitalists are coming to the table in a very big way. Chris Sacca just started another VC fund focused on this. And I think it's quite interesting that we also see that coupled with things that are happening with companies like Tesla. And that has obviously moved quite significantly over the last few weeks. And so there seems to be a movement, and I don't think I'm talking more in general terms of technology, that people are understanding that there have been huge technological innovations that have occurred over the last 5 to 10 years that are quite important, that are now maturing and now have the ability to be investable. And so I think this is a very good thing for Bitcoin and other digital assets going forward, is that there seems to be an acknowledgement and there seems to be capital flowing to millennials and to younger generations that want to make these investments. And I think that's really important going forward. So it's a really interesting time to be on the front lines of Bitcoin and the overall space. The overall adoption, and we saw the education are continuing. And I think companies like Lolli that allow people to actually earn Bitcoin for their usual behaviors, and some of the other projects that are coming to market that are moving from testnet to mainnet, that are offering things like a cold card that offers more security for your digital assets in Bitcoin. Things all are happening right now that are very exciting. And I think we're in some very interesting times going forward. We had to deal with, crypto winter for the last year and a half. And I think, it's my hope that we are starting to move from that and move to better narratives about maturation of this overall innovation and this revolution.
Yeah, I think that's a positive way to end things. Golden age we're entering. We might have some negative things, negative worries. The trend is positive. This world is becoming more technologically advanced. People want to get on future trends like Tesla, as you brought up in a tweet that I actually mentioned your tweet on yesterday's show. Check that out, everybody. And big cryptocurrency, this is the future. Golden age 2020s. We are in the 2020s. We're about to enter the second month of the 2020s this weekend. So thank you very much, guest. You all rocked it. You did a great job. Thank you so much. Remember, we do this show every Friday. So I'm Adam Meister, the Bitcoin Meister, Disrupt Meister. You get a new show here every day. It's not just this week in Bitcoin. Saturday, we'll be back for Beyond Bitcoin. So remember, check out the links below. Check all of their Twitters out. Shabbat Shalom, everybody. I'm the Bitcoin Meister. Pound that like button. See ya tomorrow, next week, whenever. Have a fun time watching a football game if you happen to be doing that this weekend. But keep on learning here and check out all the archives. Follow me on Twitter, TechBalt, TechBalt. Thanks a lot, guys. See ya. Bye-bye. Let us hang on. I forgot to click on stop live stream. Bye-bye, everyone.